Now back in 2020, Forbes conducted a poll, and in that poll they found that just around 55% of Americans were invested into the stock market. And in that same poll, when they looked at ages between 18 and 30, that number drops to around 39%. I think we can do better. Today, let's talk about investing into the stock market. We're going to break down what the stock market actually is, how you can start investing into it, as well as common mistakes that many new investors make. And I'll talk a little bit about how I actually invest into the stock market myself. But before we get into anything, we should probably understand what a stock actually is. When you purchase a stock, you're basically buying a part of that company. And in turn, you become part owner in the company. Now, you're not going to be in the boardrooms making all those big decisions, but you are providing capital to that company in the form of money to help them grow and succeed. This is called becoming a shareholder. Now, one of the reasons why I didn't start investing as soon as I turned 18 was because that I thought it was this big daunting thing that was going to take so much time and I'll have to learn and get a degree on it, and it just kind of felt daunting. And I kind of defaulted to what I usually do best, procrastinated. Now, I can't speak for everyone, but I believe some of you guys can resonate with that sentiment. But I feel once you get to understand how the stock market actually works, it doesn't feel so bad at all. Now, this should probably go without saying that you should believe in that company, that they're going to grow and succeed in the future. Now, if you plan on holding that stock for less than a year, then you become a short-term investor, or sometimes called a trader. Now, if you plan on holding this for more than a year, you become a long-term investor. And there are some tax benefits that come along with that, but we're not really going to be talking about that right now. Let me know in the comments below if you would like a future video on that. By the way, I'm not a financial advisor, I'm just a guy on YouTube trying to offer my random help. So please, do some thorough research before making any type of investment decisions. Now, one of the common mistakes that many investors make is by investing very heavily into one company. This is kind of a putting all your eggs in one basket type of approach. And while it can make you a ton of money if that company goes up, you can lose all of that money if that company goes bankrupt. A strategy that many seasoned investors seem to make is by investing into a mutual fund. Now, this spreads the money that you invest into it across the board into many different companies. For example, the S&P 500 spreads your money across 500 of the top companies within the US. So this means that if one of those companies happens to go bankrupt, you wouldn't lose all of your investments. And hopefully the 499 other companies within that fund will help to accommodate and kind of balance out your portfolio. Investing is a common tactic that many billionaires use to grow their money and protect it from inflation. If you want to learn a little bit more about inflation, I'll leave a video down in the description below. Now, you probably think to yourself, everything sounds fine, but how do you even go about starting to invest? Well, you'll probably need a stock brokerage. There are many stock brokerages out there, including M1 Finance, Robinhood, Charles Schwab, Fidelity, and that's just to name a few. One thing that I would advise you to do is look for a brokerage that is a zero commission one, where you don't have to pay a commission for each purchase that you make. This will probably save you tons of money and avoid unnecessary fees. Now, you've probably heard of people doing short-term trades and making tons of money, but I would probably not do this as a beginner because it is very risky. This is probably one of the riskiest types of investing. You kind of put yourself in a high risk, high reward situation. Personally, I take more of a long-term investment approach, investing into mutual funds and index funds, and the occasional single stock if I really believe in the company. I usually invest into the stock market fairly consistently, whether it's high or low. And when I see a big dip in the stock market, I usually look out for companies that I feel are going to be very successful in the future, and I just buy them, and I see it more as a discount. But I can't stress enough, do your own research on that company and make sure that they don't have any underlying problems that are causing their stock to drop. Now, if you found this video helpful, feel free to share it with a friend. Thanks again for watching, and I'll see you guys in the next one. Fun fact, hippos actually have less body fat than a lion. Do with that information as you wish.